Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 23rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Not a whole lot here in the United States, but we did get some interesting data across the pond. Remember that right now is when they come out with their flash estimates. Now ours is the ISM. That's the most important number we're going to be looking at. But for them, across the pond, they look for the flash PMI, CPI, things of that nature. So let's get it on with the European Flash Manufacturing Purchasing Managers Index. Remember, on these PMI numbers, anything above 50 is expansion. Anything below 50 is contraction in the economy. Looks like we've got everything above 50, albeit some of those are not as did not come in as well as what was expected by the economists. So let's get it on. French Flash PMI Purchasing Managers Index, gauge of what the manufacturers foresee the economy doing going forward. So very important because it is a forward-looking number. Like I said, French manufacturing PMI came in at 55.1, expected to be 53.6. French services PMI came in at 54.3, expected to be 57.1. German flash manufacturing came in at 56.8, expected to be 57.9. German flash services came in at 52.1, expected to be 53.4, and they revised last month's number down from 54.1 to 53, so a slight downward revision there. Still expansion though. European, for the rest of the European region, flash manufacturing PMI came in at 55.5, expected to be 56.1. Services PMI for the European region came in at 53.9, expected to be 54.7. So all of those numbers below what was expected, but still showing expansion in the economy. Consumer price index year over year for Great Britain came in at 2.4, expected to be 2.5. So good on that point. Producer price index input came in at 0.4% for Great Britain, and core CPI came in at 2.1%. Then on here into the United States, we also got our flash estimates. They were both above 50 for the manufacturing and the services, but like I said, we are going to look more so towards our ISM. Then new home sales came in at 262,000, expected to be 280,000. Last month's number was revised from 694 down to 672. So a big revision to the downside there. All of this is going to have to do with raising interest rates. People are going to be holding back as interest rates go up. Housing prices should go down to counteract that increase in interest rates because, you know, as a consumer, you can usually only budget for so much per month. Well, if you're paying more in interest, you have to buy less house. And therefore, people needing to sell those houses are going to have to drop their prices. So that, you know, all of those levers and pulleys, not always great in an economy that's kind of just trudging along. We've talked about this with gas prices going up. Well, if you can't offset that with higher wages and better economy, then it really is a tax on economy and it hurts the consumer. Wouldn't you rather see them spend that money elsewhere than just in energy? We'd like to see them spend it on Starbucks or at Best Buy, on eBay, those kind of commerce, not just one place that does not create velocity of money. Anyway, on to crude oil inventories came in at a build of 5.8 million barrels, expected to be a drawdown of 2.5 million barrels. That's a massive increase, you guys. Almost 8 million barrels of oil increase over what was expected. On that front, if we start looking at the distillates and things of that nature, we're seeing a build in that. So they are still converting it over to those refined products, but we're seeing a build. gasoline build of 1.88 million barrels. Distillates was a drawdown, but not as much as expected. So all of those things should cause downward pressure in crude oil going forward for at least the next week or so, I would expect. I think we're going to start breaking out of this upward channel and start looking to roll over a little bit as it's not looking as strong of demand as we were seeing last month. All right, and then on to, excuse me, on to gold futures. Gold futures, like I talked about, creating this nice little bottom here. It's not really a confirmation yet, but I would expect it to want to come up and at least test either this low here where this low volume node is, or right around the 200-day moving average, if there's that much of a bounce. But we're trying to build a little bottom here right above the point of control. Then on to Bitcoin. Bitcoin continues to slide. That I've talked about for a couple of weeks now. I mean, it's only a couple $100 that had cracked, but I'm still looking for that 58.80 target to come into fruition. Bonds starting to make a move up as we got a bit of a mixed bag, more bearishness in the equities for the most part, especially overnight and right off the open. We did see a little bit of a bounce we'll talk about here in a minute, but bonds starting to gain some momentum as some of these economic data points aren't as robust as we were expecting. It's not contraction, but we're just not seeing that robustness that we were kind of seeing in the last month or so. VIX, it's up on the day, but for the most part, it's kind of struggling on its direction as the equities are as well. We can see with the Dow Jones Industrial Average down over 100 points, one thing to note, it did get below this 23 Fibonacci level, which is going to act as resistance now that we're below that. You can see it acted as support and resistance for quite some time now, the point of control lining up with this. That being said, bulls really need to get above this 23 Fibonacci. Right now, we've got an engulfing candle from yesterday, move below that Fibonacci extension level, and we start settling much further away from this point of control, and it's looking like we are going to go down and test the 50 Fibonacci again. Then on to NASDAQ, yes. Down 26 points on the day, again, starting to lose a little steam, but today's market action may start to signal a little bit of support here. We've got all of these lines in the sand that we were talking about before on the way up, acting as resistance. It's the 50-day moving average. It's the 23 Fibonacci regular Fibonacci retracement, and then the Fibonacci extension lining up at the 23 there. So all of those making a very thick line in the sand for support. E-mini S&Ps have been bouncing right back and forth between these two extension levels of the 61 and the 50. Bouncing back and forth, it really needs to break through one of those to get a real discernible direction. One thing to note is we have tweezer tops here on this 61 Fibonacci extension level. Then we'll look at the 30-minute chart of the E-mini S&P. As you can see on the open, we started selling off heading into the open, overnight inventory crushing it. And then right before the open, we started rallying and then slammed back down. So all of the market action really covered the overnight session and the day session within the first 30 minutes of the day. So that being said, we can go in just about any direction. Once they cover that full daily range, it is really a crapshoot at this point. All right, on to a few things that I'm looking at. Best Buy has earnings coming out tonight. Not really sure where I'm going to play these, as yesterday the retailers really got spanked at the end of the day. Anybody that has brick and mortar was getting beat up heading into the last part of the day. So I'm wondering, even if we get good economic data or good numbers out of Best Buy, if the retail sector is just a rotation into maybe tech and stuff like that. So we're going to have to watch and see that. I would normally play this to the upside because I thought the retailers were doing pretty good. But as we'll see with Target and Lowe's, not so much. This is the 15-minute chart candles of the Target trade. I did this as an earnings play. And in Target, I did this all in my IRA and in my margin account, both of these. So in my, let's talk about the IRA Target, I went in and sold the June. So I did these in the monthlies because I was playing around with a couple of different things on this. Just wanted to see how things worked out. Obviously, the weeklies would have worked out better, especially in Target because of the directionality move. But I was trying to get a little bit more credit and see how things worked out. So in Target, my IRA, I went in and sold the the 70-60 put spread in there. So I bought those 60 puts for about a nickel. Did the whole trade for, I did the entire trade for 55 cents. Bought I did all those for 60 cents. Bought that 70 puts back for $1.20. So I lost about 60 cents on that trade there for my IRA. Same thing happened over in my margin account. I went in and sold those for 65 cents, bought those back for $1.22. So out of both of those for a loss of about 60 cents for Target. And then on Lowe's got the directionality move my way, right direction. So I didn't really have to worry about this one on the open so much. I was really concerned more about Lowe's. And if we talk about Lowe's, I went into Lowe's, sold the June again, the monthly, sold the 80 puts in there for 65 cents, bought them back for 8 cents. Pretty much a scratch for both Lowe's and Target on the day. But in my margin account, that's what I did with the 80 puts. In my IRA, I did the 80-70 put spread, like I said, and just covered the 80 puts. So out of both of my margin and in my IRA, going to be looking at Best Buy later on today for earnings. Other than that, I haven't really lined anything else up for a trade. I'm going to kind of milk out these last couple of earnings trades. All right, tomorrow we're going to be doing the webinar. That is moved from Friday now to Thursday. So go to Pro Trader Strategies, sign up for that. Make sure you put that on your calendar that Thursday is the webinars. All right. Also, give me a thumbs up, a thumbs down, like or dislike. If you give me a dislike, let me know what I'm doing wrong so I can correct it. All right. That's about it for today. Other than if you can't take that, take it easy.